Hey everyone, and welcome to Momentum channel. My name is Mo, and in this video we're going to take a closer look at the Toronto Stock Exchange, and more specifically talk about the 26 financial sector stocks that are in the S&P Toronto Stock Exchange Composite Index. Just a little bit of context, Toronto Stock Exchange consists of over 1,500 companies, but within the S&P Composite Index, we have roughly about 250 companies, and these companies are among the largest companies, and as a result, they form about 70% of the total market capitalization within the Toronto Stock Exchange. So our focus would be on S&P Toronto Stock Exchange Composite Index, those roughly 250 companies, and within those, take a close look at the financial sector stocks and provide to you what is the expected return for those 26 companies based on analyst estimates. This includes the big banks here in Canada as well as the multitude of other financial firms. So watch this video until the end and let me know what you think. All right, so in number one and at the top of the list in terms of the best expected return from a financial firm, we have a company called Element Fleet Management Corporation. This Toronto-based fleet management company has operations in North America, Mexico, Australia, and New Zealand, and is expected to have a price gain of 26%, excluding dividend or distribution income. The company has a diversified client base, serving blue chip customers across different industries and geographies, including Amazon. The company currently has 9 buy recommendations, but 1 sell recommendation. According to Refinitiv, analysts anticipate earnings will come in at 83 cents per share in fiscal 2020 and rise 11% to reach 92 cents earnings per share in fiscal 2021. Next on our list, we have another Toronto-based company called Brookfield Asset Management. The company operates in more than 30 countries with approximately $575 billion in assets under management. Brookfield has a diversified portfolio of assets focused in real estate, renewable power, infrastructure, private equity, and credit. The company currently has 11 buy recommendations and 2 neutral calls. According to Refinitiv, the consensus funds from operations per share estimates are $2.65 USD in fiscal 2020 and $2.66 in 2021, while the expected funds from operations in 2021 is expected to jump to $3.07 US dollars. Brookfield Asset Management has a price consensus target of $61.76, showing an upside potential of close to 26%. Next on our list, we have another investment management fund called 𝗖𝐋𝐈𝖖 Corporation, which has over 36 billion US dollars of assets under management. Similar to Brookfield, 𝗖𝐋𝐈𝖖 Corporation also does pay a dividend at this time. 𝗖𝐋𝐈𝖖 is showing an upside potential of 24%. Next on our list, we have 𝐶I Financial Corporation, Intact Financial Corporation, Sprott Incorporation, and TMX Groups, showing potential expected return of between 16 to 23%. Quickly looking at the rest of the financial institutions listed here, you have Manulife with ticker symbol MFC-T. You also have Great-West Life and Canadian Western Bank, followed by CIBC, Sun Life, and Royal Bank of Canada. You notice how their expected potential return hover around 10% to all the way down to close to 8%. And if you scroll down further, for the rest of the banks, including Laurentian Bank, TD, and Bank of Nova Scotia, you notice how their potential upside is a lot less compared to the other companies that we talked about earlier in the video based on analyst estimates. There you have it, folks. A quick look into the 26 financial stocks that are in the S&P Composite Index of Toronto Stock Exchange and what is their potential expected return based on analyst estimates. Do you own any of these shares in your portfolio? I would love to hear from you. Be sure to let me know in the comment section down below. As for me, I do definitely have a number of Canadian financial institutions in my stock investment portfolio, and these include shares of Royal Bank of Canada, shares of Bank of Nova Scotia, as well as shares of the Toronto Dominion Bank and Laurentian Bank. I also do have a number of shares of financial exchange traded funds, most noticeably the shares of RBC Canadian Bank Yield Index ETF, which just paid a decent dividend of 3.61%. And RBNK gives me exposure to 6 different banks, major banks here in Canada, including Bank of Nova Scotia, CIBC, TD Bank, Bank of Montreal, National Bank of Canada, and RBC as you see here, and the percentage of assets allocated to them. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone else who might benefit from the video as well. By the way, if you haven't done that already, please subscribe to Momentum channel. Here on Momentum, we post weekly various videos about stock market investing, stock analysis, financial planning, and finances. Thank you, and I hope to see you next time.